Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
I always love having you on, especially on a morning like this. It is January 15th, 2025. We got, what the headline looked like a flat to semi-soft CPI, and markets reacted very positively today. Bitcoin, as we speak, is trading at $99.1 thousand per coin. Stock markets are up over 1%, basically. NASDAQ's up 2% as we talk.
Yep.
What did you see in the data, and is the market right to be trading higher on it?
The data was, what I would constitute in line. The unrounded core month-on-month number came in at 0.23. The median on Bloomberg was 0.25, right?
For
And so
expectations.
you got for expectations. And so, the fact that you got the 0.23 meant that the month-on-month got rounded to a 0.2. So, visually it looks softer than it actually is. And then drilling down into some of the components, right? Owner's equivalent rent, aka housing, is a really large part of the figure, around 40%, and that actually showed a month-on-month increase from November, and it printed a 0.3 month-on-month, which is like basically saying that housing costs are going up at 3.6% annualized or somewhere around there. And you also had insurance rates, auto prices, airline fares, things that people spend good money on, also kind of suggest higher prices. And so, I think the market reaction is more a function of positioning and kind of risk reward at current levels. And so equities had been trading heavy for the past month. Treasuries had sold off for the past couple of months, and dollar was gigabid as well, for the entirety of that time. And so when you actually got a little bit of relief, aka a number that was mostly in line, you had an outsized reaction in the market, and crypto benefited, right? And I would say that absent crypto specific policies that are going to come from the Trump administration, one thing that's super notable to me is that Bitcoin and broader crypto is really trading like a risk asset at this point in time, right? And every crypto trader that I speak to or I know is like watching CPI as if they were trading interest rate products, right? And so you've gotten to the point where the asset class has matured. It's also grown to a sizable asset, right? And it's worth, I don't know what the broader crypto market is worth here, maybe $3 trillion, right?
3.5, maybe even
3.5, right? That is massive, right? And so I think its correlation should naturally pick up to things like equities. And so I think that's going to be a story on a go forward basis, absent very crypto specific things that the Trump administration is going to do. But when an asset gets this big, right, it just starts to perform like every other risk asset on the planet. But in terms of my takeaways, inflation is a bit less concerning than what the market had thought, and that is driving the back end of the yield curve in the U.S. A bit lower. However, I still think the story of 2025 is really going to be driven by that kind of back 10-year point in the U.S. rate curve. And I still think that you are at risk of seeing yields above 5% at some point this year. Now, it could be a function of just how strong the economy is going to be under a Trump administration, right? Like, he is very pro-growth, pro-business. He will deregulate. He will try to stimulate via tax policies, and there might be some offset with tariff policy. However, he's a president that views the stock market as his report card. And so when you have that happening, and a Fed that told you that they're going to be less inclined to cut, or the bar for cutting is higher, I do think that's going to naturally put some pressure on the back end of the curve. In addition, there's just not enough term premium in the curve, right? Like you're talking about, historically low levels of term premium and a ton of supply that's going to need to get absorbed by the market. And it also seems like Besant is going to be a little bit counter to the policies that we've had under Yellen in terms of issuance. Yellen was more focused on increasing issuance in the front end of the curve, particularly in T-bills. I think Besant will be a little bit more balanced with his approach, and that'll naturally necessitate a higher term premium. And so, you could see a scenario where the Fed isn't cutting or hiking, and yet the 10-year point in the curve and the 30-year and the back end more broadly is continuing to sell off. And I think that might present some challenges for risk
Hmm.
assets rallying further.
Yeah, that makes a lot of sense. And it's what people have been really quite concerned about. I think it's interesting you point that with, that the number isn't as soft, the CPI number isn't as soft as it might seem, and that there are these longer risks here for particularly rates related that can pressure risk assets. To me, it was more like if it, with on the back of the hawkish cut by the Fed and then the other numbers that had come out that were, uh, bearish or tough and
Strong. Yeah.
strong. Thank you, strong. Right, the other beats that we had seen in the data, it was more like if it sort of felt like the expectation was that this would be a bit of a hot number too, and that would have continued this sort of risk off regime that equities have been in since right after the election. Bitcoin and crypto have been in for at least about a month, but this is sort of like a pause maybe to the correction, the sell off. It sort of feels like.
Yeah, no, absolutely. But I will also note that, you know, certain trends are still continuing, right? Like the dollar is still incredibly
Yeah,
bid. And you had a brief kind of sell off in the dollar on the back of this data, but the market totally went the
gobbled that
other
up.
way, basically an hour later. And so like the things that are, structurally bullish the dollar or, bearish the rest of the world, those trends are still in place, right? Like the physical situation in the UK, although they had a little bit of a soft inflation number that caused their fixed income market to rally, but like that's not going away, right? Like China's economy is still not doing great, and EM has to deal with a strong dollar, and that's generally not good for inflation if you're importing a ton of your goods. And so like there's a lot of uh challenges out there in the marketplace. But with respect to crypto though, I think that the trend is pretty clear till inauguration, right? Like you do have a bunch of executive actions that will come, and some of them are likely going to be bullish crypto. And so as long as the market has that hope, I do think that crypto will kind of remain bid. The question is, after the fact,
Hmm.
is there a little bit of disappointment from market participants? Is there a realization that the wheels of government move slowly, and that executive orders are important, but in terms of actually leading to real change and structural changes in the crypto market, that typically takes time.
Yeah.
And even if institutions are all of a sudden like a lot friendlier to crypto and engaging in more activities, like that change in these institutions does not happen overnight, right? Take the banking system, like it takes months like to get anything over the line at one of these bulge bracket firms.
Yeah.
And so
Yeah.
just
That makes
because
sense.
there's a policy change or tune shift, it doesn't necessarily mean that you'll see the change day one. And I think that this market's very fickle, and so if you don't see you know prices continuing to go higher and more positive catalysts, like you'll stall out at a certain point. And so I think you're meant to you know there's decent risk reward to staying long crypto going into inauguration, particularly now that some of the macro concerns have abated.
Yeah, that makes a lot of sense, and I totally agree with your point about how likely it is that we're going to see anything actually happen soon. I think you will get some announcements and policy changes, but enacting those will take a while. There was a great headline I saw this morning. I know you saw as well, that Trump's SEC is expected to halt or pause enforcements and possibly pause or withdraw crypto-related litigation matters that are in court. We've expected that. We wrote about that back in November to our clients and counterparties, that specifically that those two things were likely. But even those are short-term sort of exemptive relief. It doesn't sort of portend necessarily what the long-term path will be for the SEC. And we don't expect that guy, Paul Atkins, if he does get confirmed, to happen until April.
Yeah. So, I mean, just think about it in the case of Coinbase, right? They have been fighting the SEC for a really long time. They have listed a ton of different tokens, and they've essentially operated as if you're going to have a regime shift, and the SEC's been in the wrong, and eventually they'll get rectified. And so, in terms of less litigation but by the SEC, or less enforcement, like, I don't necessarily know if that's going to change how anybody's like operated in a meaningful way. And so again, the wheels of government move slowly, and I think folks just have to be patient. I think you're still talking about a year where Bitcoin's likely to continue to rally.
Yeah, I think that's it. I think that's what we watch for. And if you're interested in watching the inauguration, I will say, in Kalshi, the legal and regulated betting prediction market, has some interesting ones around what the president-elect may say in the inauguration. And in general, though, I would encourage people.
Well, after the inauguration, he will be president, no longer the president.
That's true.
No.
But yes, crypto is converging on Washington, D.C. this weekend. I will be there, and so will many others. And I think so. You may see reporting or announcements or who knows what. But it is certainly going to be exciting. By this time, this time next week, in next week's episode, there will be a new presidential administration. So it's the ride is just beginning. The crypto presidency.
Yeah, it is going to be a very exciting 100 days.
Yeah.
But I will say the last thing to end on is that, you have to think that, Trump is going to operate like a second term president, right? There is no reelection worry for him, right?
Mm-hmm.
And so he will pursue, the policies that he thinks are accurate. And, like, he doesn't have to, like, normally, like, if you're a first term president, you have 100 days to essentially enact your policies. And after those 100 days, you've spent most of your political capital, and you have to start worrying about reelection and the next presidential cycle. So, in a first term presidency, your first 100 days are the most important. But in a second term presidency, like, every day is just as important. And
yeah,
I keep going back to the bucket speech that Obama gave, in his first
White House Press Corps Association's dinner. Yes.
Yes. It was like immigration policy, bucket, executive action. Education policy, bucket, executive action. And so that's the
throw it in the bucket.
Mm-hmm. Wow. Yeah. I don't think that's what he meant by a bucket, but
that's what he meant. You put it in the bucket. I'm not sure what else he could have meant.
Yes.
No, you're right. That dynamic is going to change, not just on crypto for this president and this presidential term, but not just on crypto, possibly on other big ticket items: taxes, immigration, foreign policy,
entitlement spending.
Exactly. So. And maybe even government efficiency, although I think we're all sort of, not holding our breath for that. But look, he's got the world's richest man in charge of figuring that out for him. So I guess we'll see what happens there too. Beimnet Abebe, my friend from Galaxy Trading, thank you so much.
Thank you for having me.